In this video, we're going to discuss the use of divisions as profit centers. So the first thing you have to do is go into your company. So you click the Maintenance tab and select Company. On the right panel, or excuse me, left panel, you'll see a thing called Divisions. When you select that, you can add as many divisions. The default is Retail Store, and then these are three additional divisions I've added: Parts and Service, Project Rollout, and Wholesale. So that's the only thing you have to do in the company information screen. The next thing you have to do is go to your General Ledger under Accounting, under GL Setup. You'll notice here where they have divisions set up. So in the retail, Positive gives you a default for what your assets are going to be. And notice the first division, each account has a 001 after it. That means it's the retail division. If I look at my wholesale division, each one of those has a -002. And many times people will use the same GL account for, let's say, inventory. They'll use the same GL account in every instance, so it defaults from the one inventory general ledger account rather than having a separate divisional inventory. So once all those are all set up, the next thing is when you do your sales. So let's do a quick sale. Now, a little note here, under your Maintenance Station Manager, if I look at the counter, it says my default division is Retail Store. And as you can see, we've got all the divisions here. So Retail Store is the GL accounts that are going to be hit whenever I make a sale. So I'm going to do one with the default. I'm going to do a quick sale. And I'm going to pick a SKU. I'll pick this first item. And I'll pick the serial number. I'm not going to add any additional accessories to this, so I'll just say to invoice. I'm sorry, because I highlighted that line, it put the casters on. So I am going to tender this and say it's going to be paid with a check. And here's my check number. I'm not going to print a packing slip, nor any of my invoice forms. Okay, let's do another quick sale. And this time I'm selling to a wholesale customer. So I want this particular sale to be charged to my wholesale revenue. So up at the top of your screen, you have this little ball, looks like. When you click that, a window comes up and says, for this sale only, what division do you want this to be? And we're going to say we want this to be in a wholesale division. And we'll select that. So now I'm going to go in and sell the same item. And I'm not going to do any accessories. And I, at this point, going to hit tender. I'm going to use a check again. Again, these are walk-ins, they are not customers. We're not going to print any forms. Okay, I've completed 2 invoices. The moment I finish this, it's going to default back to my retail division. So I'm going to escape and I'm going to void the invoice. All right, let's go to our balance registers. Go to transactions and say I want to balance my register. So it goes over to my general ledger. It has the 2 transactions. Okay, and we'll say there's $200 going to be left in the drawer. So all the differences are 0 here for any kind of cash tender, not on account. So I'm going to post this. So now let's go to the accounting tab and go to post transactions. As you can see, I have one thing showing the invoice. That hits my sales. But notice I have this thing that says wholesale. So wholesale had 1 transaction. Retail had 1 transaction. And if I click all divisions, I'll see this invoice here, my retail invoice, all had 001s. My wholesale had all 002s for the proper sales account and the purchases account. So those divisions automatically charge the right general ledger account for your income statement. And again, as I mentioned earlier, I would recommend having only 1 inventory account for all the divisions to pull from. Your purchases can be that division, but your general inventory account, when its items are received, it'll always go into 1 inventory account on your general ledger. So that's the procedure to sell between different divisions while you're on one screen.